Hey guys, for more like this, don't forget to hit the subscribe, the like, and the notification bell.
Hey everybody, it's Kevin Wadsworth and Patrick Karim at NorthStarBadCharts.com, and we've got another treat for you today. We've got David Murrin, global forecaster, with us. He's been particularly on point with a lot of the geopolitics that's taking place at the moment around the world, and particularly in Russia, Ukraine, and the implications that has on global peace and security and all that kind of stuff. Actually, David, I've got to say, precious metals are starting to make a little bit of a move. They're showing some signs of life. I think everyone's kind of expecting them to collapse again and fall into the abyss. We're so kind of used to that. We're also seeing interest rates coming down. We've seen the dollar weakening. We've seen energy prices starting to ease off after the incredible highs that we saw back end of last year. So some mixed signals out there, actually. But listening to some commentators, you might think that we're heading back towards some type of normality, interest rates normalizing, energy levels, energy costs normalizing. So is it all unicorns and rainbows, or are we just sort of in the early stages of something something bigger developing here? What are your overall views? What do you think?
Well, if it's a unicorn, it's very black and it has an extremely long, dangerous horn.
Yeah, that's not a very promising start there, David. You've got me worried already.
Well, having set the scene, look, I think the defining process we're in is obviously around Ukraine, Russia, and NATO's response, which we'll come on to. But as you guys are into charts, I think we need to set the scene for where the various market sequences are, and from there we can sort of unravel what may be ahead. And the first thing, that the dominant sequence right now is the Kondratiev cycle linked to commodity prices, which, as per the last show we talked about, essentially started the C wave at the 2020 March low. And that C wave surged into the Ukraine invasion last year. And since then, we've gone sideways to lower. So oil's got to sort of somewhere, 70, 80. And that's exactly what triggers this relief process, which is it we're back to normal. It's all going to be okay. And central banks are convinced, even though they didn't see where the surge came from, it's an aberration, situation normal. Fed puts rearranged, start printing money again. You can see it on their foreheads. I think that's a fundamentally flawed concept, because essentially the correction in oil and the correction in commodities since the invasion last year has been what I would term a wave two. And that wave two correction has been in time rather than price, which is a dangerous sign of how much pent-up demand there will be as this unfolds. So I think we're looking at oil breaking out. It has done at 80. Natural gas is a long way behind, but it will follow some deeper correction. There's a lot of it around, but it will surge. We've seen copper move after its wave two, and it's looking pretty dynamic. And as you quite rightly say, precious metals are making their move, especially gold, which is crawled up in this horrible looking pattern, which I think will just keep going higher, and there are no corrections. And that links to the dollar. I think in the dollar, in terms of the dollar index, cable against euro, against Inoki, which is one of my favorite pairs because it's a petrocurrency. Essentially what we've got there is we've seen a big high last year, which I suspect was strongly related to repatriation flows, when the losses of American investors were so great, linked to the NASDAQ, leverage, bonds, combinations. And we've seen that peak, and now we're in this decline in the dollar. And when it was somewhere around 104, it looked like it, or 103 and a bit, looked like it had done 5 down, ready for a correction. It spurts just about up to 105.88, and we're off again. Everyone's still looking for the correction. I suspect there isn't one. I think the whole thing is flipped, and that is why gold is behaving the way it is.
So do you see stock markets sort of having any possibility of what you might describe as a melt up here, or are you on the side or have the point of view, which I think our technical charts are fairly strongly suggestive of, that stock markets have made a fairly decisive breakdown and are sort of likely to to plunge new lows rather than sort of melt up at this point. What are your thoughts
I'm
on
a plunger myself, but we've got to qualify the plunging. In the US, we've got things like the NASDAQ and FANG, which are well-developed bear markets, where each high is lower than the last and each low lower than the last. In wave terms, that's like a coil of 1-2s. The implication is, as long as the second to last high isn't broken, the next break of the lows could usher in a massive third wave where literally the dam breaks. And this whole concept at the end of the inflation is under control because you're in a wave 2 of the commodity cycle is entrenched in the linear thinking of central banks. Even Sunak has bet his career that he's going to get inflation under control, which make me chuckle because that's exactly what people do at the end of corrections of this size. They think it's all under control before it blows up in their face.
A little bit like the 1970s where inflation came in a series of waves, didn't it?
It's exactly what we are. And interestingly enough, in the broader sense, more and more of my work highlights that social systems and empires rise and fall. We basically see rising systems challenge old systems to ensure that the human systems are dynamic and expansive. And when they become sequiescent and moribund, they become vulnerable to challenge and adaptation. But the drumbeat in the moment when that happens is triggered by the Kondratiev cycle surges. Instead of thinking of Kondratiev cycles inflationary observations, which I think are the best way to track it, I suspect it's much more an entropic sequence of events which keeps churning human development, and inflation is a manifestation of that process, and war also. So I think it's more fundamental than we ever imagined when you think about a financial market, that what we're going through is an entropic shake-up of an old Western system having to stand up against a rising Asian system, and the conflict breaking out and accelerating, which we'll talk about. So all in all, the summary is strap yourselves in for the commodity sector. Precious metals are top of my list. Don't be surprised if the dollar doesn't really show any retracement. Favorite pairs, the Noki and sterling versus the dollar in terms of that G7, G10 plus concept. And the bonds are going to literally give way and they're going to surge lower because inflation is the big story as oil starts to break up. And I think oil's dynamic through the 80 break we've seen 90 next and through as we start to move will really surprise people, because this is the phase when you get commodity constriction, and that constriction is linked to conflict, which leads us to the geopolitical dynamics around Ukraine right now. And I've obviously been covering it, and for those readers of my Murrinations, you'll see every step of this process is pretty much, you can read it before it happens because it does have a certain equation as it unfolds. And one of the things I talked about a couple of weeks ago, it's very clear that NATO has decided it's going to push Russia out of the territory it's occupied in Ukraine. And it's going to give them the weapon systems to do it. Now, I think they could almost do it with what they've got, given the right conditions. But by the time we've given them Patriot missile systems, which have a defensive capability, but when you put them close up front, also mean that your movement through enemy lines now can't be interdicted by enemy aircraft. It's an incredibly protective shield. Now we're looking at heavy weapon structures. We're looking at long-range HIMARS, because the Russians have adapted and moved the ammunition dumps outside the range of the shorter range HIMARS at 52 miles. So there's less impact on the way the artillery is operating. All of those things suggest that somewhere in the future, we're going to see Ukraine make a decisive breakthrough and literally run riot around the back ends of the Russian lines. And it'll be almost impossible for the Russians to respond.
There's an elephant in the room there, though, isn't there? Would the China question enter into that? Is there any point at which you think China might think, okay, well, help our friends the Russians?
I think it's a stampede of elephants, quite rightly said, because I can see now this process where Russia is pushed back. I think the nuclear ceiling was raised about 3 months ago when the linkage between a single use of a nuclear weapon in Ukraine, which appeared to be separate to Putin's strategy of escalate to de-escalate, was linked with a large conventional strike to the traditional mutually assured destructive ladder we knew in the Cold War. So in effect, the ceiling has been raised because the use of one weapon just puts the world into a very different space even Putin doesn't want to go into. But as you quite rightly said, my real concerns are, where is she in this position? Because I've argued before that they went into a 4-year plan from 2020, which was no longer manufacture and export, but basically manufacture, use internal demand more and more, though there's a gap, and militarize your system, store resources, which is what created the first surge after March 2020, and essentially prepare for conflict. And their windows are such that they've, in the demographic decline, as we talked about earlier, Patrick, that's exactly right. But it doesn't mean it makes them now demure. That's something that happens in a decade or 2 decades. What happens right now is, you know, that you either use it or lose it. Either China seeks global domination, as I believe it does, because it finds democracy an anathema and, you know, the risk of disease. Either it does it now or it never does it. And it'll never get a better chance than having a hypersonic weapons window, which threatens every warship in the Asian basin simultaneously, and Biden as a weak leader, both of which. And the other problem is if a system becomes financially unstable, because he has a huge debt mound. It's the first mound of empire when you borrow money to build your USPs, and you either go to war or you lose a whole lot. So I think he really sits precariously on that. And for that war situation to work, he needs 2 conditions. He needs a Russian ICBM shield, because they don't really have enough at the highest court of nuclear war, because they've been building DF-21s and 26s to ship to destroy warships. So they couldn't put the same emphasis on long-range rocketry, although that's shifting a little bit. And most importantly, he wants overland resources from Russia, because once he pushes America out of the Asian basin, there is still a huge industrial race to build ships, which then come out of the second island chain and start controlling the oceans. Much like the Pacific conflict in the Second World War after 41, both the Japanese and the Americans after Pearl Harbor kind of retreated into their corners in some ways and built as many weapons as they could so they could come back and face off. I think we'll see something similar. And that's where resource constriction comes in. We're going to see Putin, I think, cut the energy taps off just out of spite as he starts to lose. And you're going to see the Chinese essentially drawn into the process. And there were some hints about Chinese companies breaking the embargoes already, you know, to support Russia. I suspect there's a lot more of that than we realize, even at this stage.
Yeah, quite a lot of commodities are global commodities are sort of the mining jurisdictions are in countries that are, how can I put it, sort of more favourable towards Russia's view of the world than the West's. And I'm thinking here particularly about battery metals and about uranium particularly as well. I mean, anybody that follows myself and Patrick will know that we have been looking very sort of carefully at uranium charts for the last 2 or 3 years, you know, ever since they began to show signs of breaking out, and they've had their first wave up and their first major sort of pullback and correction. And if the charts are anything to be believed at the moment, you know, the potential for uranium seems staggering. And that's the technical part of it. That's the technical chart analysis. And you kind of ask yourself, or the technical chartist, you sometimes ask yourself, I wonder what it is that's going to cause the chart to do what the chart is telling us it's likely to do. I mean, no chart prediction comes with a 100% guarantee. What we're doing is we're weighing probabilities, a little bit like you are there, and you're talking about your geopolitics. There's a whole range of possible outcomes, and you weigh the probabilities of those outcomes, and those outcomes change all the time. But having said all of that, looking at the uranium charts in particular, there's potential there for the prices to become, you know, almost unimaginable to us sitting right here at the moment. And I'm thinking, what can cause that to happen? And I think you've just said, in a nutshell, what might cause that to happen.
Well, I mean, there are 2 elements of this. One is, I think the world is definitely going to bifurcate. Just as we ejected Russia from the Western sphere of influence and trade, I think that's going to happen to China. And it may happen before conflict, or it could happen simultaneously. But either way, it's no longer about I've got a copper mine. It's where is that copper mine, and which side of the bifurcation line does it exist? And can I then actually export it in a wartime conflict and get it to where it needs to go? Can I secure the sea lanes? So Australia's problem is, you know, it's a commodity country. Brilliant. Its main customer are the Chinese. So the moment that war sparks off with the Chinese, nothing's going to China. And the question is for the Australian economy is, do you redistribute those resources to the West? Can you get them across those vast ocean expanses without interdiction? And so its economy sits on the watershed. It looks great until the moment of conflict or bifurcation. And I think that's really the very big issue, is that bifurcation is coming with or without conflict, as Russia and Ukraine polarizes China to support them, as you hinted at. And I think it's most likely all to come simultaneously. Even this reversal from the wolf warrior diplomat status that we see where the Chinese have become more like a panda, trust me not, that's basically the process of I want the greatest surprise rather than I've been agitating the ants with my stick first. So I think I've always thought surprise will come from the Chinese when they're the friendliest, at the worst possible time because we drop our guard. And that's what strategic surprise is about. So I'm concerned whenever I see those momentary outreaches. Not that I'm a warnick, it's just I understand the psychology of deception. And we've seen it for the past 25 years.
Yeah, it's strange, isn't it? There's been a sort of almost like an eerie calm in much of the West over the last sort of 2, 3, 4 months over the back end of last year and the early part of this year. It's almost as if the sort of news media are kind of conveniently ignoring what's been going on across in Ukraine there, and it's barely even made the minor news items at times, you know, and it's quite puzzling to me at least why it just fades from the news cycle.
Well, it's quite interesting. I mean, in the marination section of my work, where we make predictions about what's going to happen after they come out, I always add pieces of post-article news and the dates at which the same information reached into the public domain that we talked about weeks beforehand. It shows people the power of the kind of work we do. But one thing is really clear is that the Germans stood in the way of a NATO mobilization to provide an effective offensive capability to Ukrainians. And I suspect most politicians were probably given the simple equation: if you don't do this, inflation is going to carry on and you'll lose your job. Because that's basically how they see inflation, as caused by the invasion of Ukraine. It's a bit bigger than that, and they're missing the point of all the other elements. But put that way, lose your job or support Ukraine, and the nuclear ceiling's been moved up successfully. We believe we can operate underneath it, as we did in Korea, by the way, so it's not unique. Then basically you can see why they've made this go phase. What is interesting is watching Germany be unpacked. And there's a whole piece which I wrote 2 years ago questioning Merkel's judgment, because every judgment she made debilitated the EU and Germany. And even if you were a random moron, you couldn't get everything right to pull the walls down. And her motivation has to be questionable, as was her predecessor, who was so totally pro-Russian. She's East German. And to what extent Olaf too is a sequence of 3 leaders have been pro-Russian. To what extent was the reverse takeover, with East Germany covertly overtaking the political system inside West Germany that disarmed it? And we now see this massive fracture, which won't go away. Who can trust the Germans under their present leadership? The pressure the Americans put onto them must have been enormous to get them to move with those leopards.
Yeah, it was interesting how that whole process took place. There's clearly a lot of pushback from Germany on the question of providing the tanks, but certainly from the outside looking in, it appeared that the pressure must have been intense, because clearly the consequences of taking that action are, well, you don't have to be an Einstein to realize that does kind of stir the hornet's nest a little bit, to put it very, very mildly and very simplistically.
The interesting thing, Kevin, it's not as if that was the first stick we put into the hornet's nest. Giving HIMARS was so destructive to the Russian forces before they underwent their blitzkrieg collapse. And so we've been doing this incrementally. And I love the way we say, we're going to give you like 200 tanks, not 2,000, just enough to make a difference, but not enough to get really upset. And I never trust the numbers in reality. I mean,
well, who's going to be counting them anyway? It's not as though the Russians are necessarily in a position to count them. It's kind of academic, whether it's 200, 300, or 500. It's might make a difference on the battlefield, but in terms of the messages,
once the system's in country, how many provide, you'd never have to declare. But what's I think also very interesting, as in Britain, is that there's this big question of what did Brexit do for us, and there's a whole linear turn the clocks back and we should go back. I think there's a couple of things articulating. First of all, the state of Europe only gets worse. Where it was once a third of the world's economy, it's an eighth. Really, do I want to be part of that trading bloc? Secondly, the most powerful country in Europe is Germany, and look at its behavior over leopards. It's not consistent with the foreign policy that we would wish to espouse. And in judging Brexit, we have been through the most horrendous 2 events. We've been through a COVID pandemic, mishandled by everyone, of course, and made worse, but we have. And we've also been through a conflict, the biggest in European history since the Second World War. And so you can't judge whether Brexit worked or not easily through economic measures. But what we can say is it gave us the independence to actually correct the error where we didn't spend money in defense and deter Putin, and at least step up to the plate fast enough to make a difference to Ukraine and keep it in one piece. And Boris did that, and he obviously carries on advocating for it. argue he completely let us down with the defense reviews, which sent the weak signals in the first place. But what's really interesting in my linear lateral model is that Sunak, being a linear person, will just carry on whatever policies, basically, but just keep iterating them rather than fundamentally changing them. And we have taken the core step. 14 challengers literally started an avalanche. I mean, they're very capable vehicles in their own right. And I think, if I was a Russian soldier, I'd be terrified because I don't have anything in my inventory, barring a lucky artillery shot, to stop them. So, but we did create the cascade. What is little talked about is we donated some 690 Brimstone missiles last year. 95% of them went over the top of the target, scanned the battlefield with a millimetric radar and killed a target, 95%, and we just gave them another 600. You fire those 600 missiles in front of your advance and there's nothing left, and you open a corridor for penetration. So there are other systems that have been given, which are really part of this all-arms war, which I don't think Russia has an answer to, or can have an answer to, which moves us to escalation through Chinese involvement at the end of the stack.
Well, it's probably fair to say, is it, David? I don't know if you'd agree with this, but in effect, Europe is now full-scale war. The European, the EU, the European, well, NATO, let's say, is in all but name at war with Russia. I mean, I don't really see how you could sort of deny that at this point. I mean, okay, so there hasn't been a formal declaration of war, but we're at war, are we not? I mean,
I'm glad you raised the point. I've been talking about it from the day it happened. And actually, the words that I said was, the last time Lend-Lease took place, America was giving Britain Lend-Lease after, the summer of 1940, September 15th, when Joe Kennedy was finally proved wrong that Britain wasn't going under with that big day in the Battle of Britain. And Lend-Lease commenced all the way to the Pearl Harbor, where America was unofficially providing us with equipment. It gave us money, equipment. The equipment came in American ships, which started to be torpedoed by German submarines. They became escorted by American destroyers. And for months and months before Pearl Harbor, America and U-boats were duking out in the Atlantic. They were at war, no words though. And we're in exactly the same state. And it just staggers me. I mean, Putin is right. We are at war, just our politicians don't admit it. I can understand why they don't admit it, because you don't want to escalate it. But what I can't understand is why our defense spending hasn't surged to 5% with a 5% bonus input, because our lethality and capabilities are terrifyingly inadequate to face what we're walking into. And that's the irresponsible part of the picture.
I'm wondering, David.
Spine-chilling stuff.
Well, I'm trying to tie in the prices of commodities while you're talking. And so if oil's pulling back, or even the Fed fund rate or the 10-year yield, all that stuff's linked together. They broke out of a 40-year descending channel. It broke out. Now it's retesting. So now as the bonds go back up, the yields are falling. But that's just a bull market correction above an important breakout line. As soon as that turns up, even oil right now, it's refusing to go below 80. It's getting got up. It's about to explode. Sugar's exploding. Sugar tracks the rate of change.
Yeah.
So I'm wondering, the next escalation in the war, is it going to come when oil hits 150, 200? What's your target? Like your next wave up for oil?
So looking at oil, I think we finished the wave 2. And as you quite rightly say, 80 was the critical level. It spent a week or so fiddling around 80. Somewhere here, we're going to see a surge to 90. And people go, oh, that's interesting. And now, the moment that happens, this whole delusion that the central banks have inflation under control is going to evaporate. And bonds, I think, have already, in the US, they finished their correction last, as in the recent high in a couple of weeks was the corrective high, which is what you describe as the pullback in price. And in Europe, in fact, the high we just had at the same time was lower. So the highs were made prior to December. But we're on a yield rampage, no doubt. And interesting enough, the European Central Bank is now controlled by Bundesbank-orientated thinkers who, instead of printing money for the southern nations of Europe staying together, they're now anti-inflationary. Now, that means that, if you remember Bundesbank anti-inflation policy, it was pretty stark. So I think we're going to see a catch-up in Europe. And the European equity markets made a secondary high like Eurostoxx, but that's an irregular high before it drops like a stone. So everything is in place, as we go back earlier, for a horrible equity experience where it all really starts to catch up, and finally the delusion of the period of money printing and all the leverage disappears, and endemic inflation becomes a recognized problem rather than aberrant inflation with a single surge, which is how they think of it at the moment.
Do you have a tagline type of target maybe for the next wave up for oil after 90? Like where does it run up to?
Okay, so I think my ultimate target is 350 in the next 24 months, simply because we have just seen wave one and wave two. And what happens, we're not even halfway through the surge. And then the whole conflict dynamic of higher price, greater competition can really create extensions in the fifth wave. So it's scary times, I think, for something like this.
And I'll tell you, sorry, David, I'm sorry.
No, Patrick,
well, because, and I've noticed that whenever there's surges in oil, like when it goes to the next plateau, like not just playing a channel, when it surges to a new plateau, like if it goes above 150 now, it's or 300. That's never has U.S. growth stocks went up. They muddle sideways. When oil surges, everything freezes. Growth freezes.
It
kills it.
And we're looking at highly leveraged asset-based society, and inflation is the killer to that paradigm. It's not like Turkey where basically your assets go up it's completely different, because Turkey's had massive inflation and everything just went whoosh. It's the opposite. It's an absolute destructive phase that there is no way out of, which goes back to, where's the NASDAQ going? I think that we are targeting the lows of 07. That's ultimately the investors should be thinking everything we've had for 20 years is a huge monetary expansion that was a blow-off, and you always return to the base of the blow-offs. Now the first base is the lows around 2020 in March, but through those lows is a bigger level below it. So I think that's the sort of concept. If someone said to me, I really want to have a stock portfolio, I'd say, no, you don't. You want to wait until you get to those prices in a couple of years, but you do want to be in the commodity sector. You do want to be in precious metals because you can make generational wealth before that.
Well, it's certainly true that the SPX has only broken down versus inflation in the last 100 years 3 times in the way that it is doing now. So this would be the 4th occasion in 100 years that the S&P has broken down versus PPI, proxy for inflation, in the way that it is at the moment. And I think the average losses, if my memory serves me, each time are somewhere ballpark 60%. That kind of figure. So yeah,
NASDAQ priced in gold in the 2000 .com bubble lost over 90%.
Yeah,
priced in real terms. So the numbers that David gave out there, that 2007 lows, if you price it in gold, it could be worse than that.
Yeah, of course, and S&P and Dow Jones do have sectors in them that will benefit. They include some sectors, unlike the Nasdaq and unlike tech, which are very, very sort of niche.
I mean, the FTSE hugely benefits from being a resource-orientated index. I do think it's close to its highs, and it will follow everything else, but it's held up there. And when people talk about Brexit, the reason why it's quite interesting is because it's an international index of resource-based stocks that are globalized. So it's and that's what Brexit was about, a global Britain. So there's a commensurate parallel, not that they were added post-Brexit, but there are parallels in there. I think it's just going to be a terribly, terribly challenging time. And for those that think that capital is going to last forever, I would just leave them with a really important point. Is every time Britain, or Britain especially, has fought 2 world wars, you move towards a command economy, because you have to focus your economy on the things that give your economy survival. Now, I think this version of it is a hybrid market command economy, where the government turn around and say, okay, if you get your resources from these spheres of influence where we can control them, we'll give you a tax break. Or if you go to these spheres, we'll give you a penalty. And if you make these chips in this place, we'll give you an incentive. So I think we're about to shift to, and if you're a company outside the things that you need to survive and make war, you're about to have a dire time. So this end of capitalism, because we printed too much, if we're lucky, instead of collapsing into a big heap, so you never get up, migrates itself into this sort of hybrid system of command market orientated hybrid, which is about how we mobilize ourselves for the struggle ahead between Russia, China, and the democratic worlds.
Well, David, I think that's probably a good place to pause. I know we're going to have you back on again because all this stuff is crucial to investors and to traders and to everybody really, because of the implications of everything that you've spoken about there. Do you want to just tell everybody where they can find you on Twitter, social media, and of course you've written a book as well. You've got books behind you that you might want to mention as well.
So primary point of contact, go to the website davidmurrin.co.uk, MURRIN.co.uk. You'll find all our media stuff in all the podcasts we do. You'll find them up there. You'll find Murrinations, which are the detailed analysis and predictions behind the conversations we've just had. It's less than a newspaper a month, and it will give you insight. It's really investment grade constructs for everyone, so that you can have a broader idea of what's happening. And then we've got higher level market analysis designed for larger organizations, which is really like a hedge fund embedded in alpha generation. And of course, if you've got any really big, deep questions, you can aim those towards us and we'll do our best to answer. But there are twofold reasons. One is about educating you to be more self-aware as a listener as to how we got to this mess and how serious it is and how we can navigate through it. I am an optimist by nature. I know you're going to giggle when I say that.
It didn't sound very optimistic to me, David.
Yeah, that's because I'm a realist as well. And it's far better to articulate reality so you can then navigate through it than it is to find reality too difficult and deny it, and then it slaps you in the face.
Well, just remind me not to talk to you when you're in a pessimistic mood. That's
I'm really pessimistic, actually, Kevin. And one of the reasons why I decided to make this information more public was to explain to people, if you can understand the terrain, then you can, as Sun Tzu say, you can win your battles. And at the moment, we in the West don't understand the terrain we've landed in, so we don't have any chance. So this is about terrain management and navigation. And with that knowledge, then we do have a chance. And so if you're interested in what I've been discussing, please go to the website, sign up, find out more, spread the word, because it's no good if just a few of us have this insight. It needs to go right the way at the top of our leadership and the tops of business, where those that will listen, so it cascades through our society as quickly as possible.
I'll send your link to our Premier Trudeau. I'm sure he's gonna.
Yeah, I think as a liberal, you might find some of my views a little challenging.
Kevin, we're gonna get shadow banned by YouTube now. It's done. Why did I talk about Trudeau? It's over.
Shadow banned. That's an interesting phrase.
But it reminds me of a poker from the movie Rounders. There, if you go to a poker table and within 30 minutes you don't know who the sucker is, you are. And that's how I feel sometimes. If we have to give the information out,
that sounds like my life, Pat.
Well, look, David's right. You have to understand the rules of the game. If you don't understand them, why the hell people are putting their money in growth stocks?
And that's it. And the thing is, Patrick, and it's so interesting, is when I first started, I honestly thought, this is 3 years ago, that actually news sources were relatively trustworthy within limits. And I'm afraid that the news that we're given in the West has huge biases. We saw it over the pandemic. You see it over the lack of mobilization of, towards Russia and China. And actually, what we're trying to offer here is a system using price-based systems in markets, which tell where we are, and you can't deny it. And then also this model of systems and how they rise and fall. And you don't need to have accurate information. It's just part of a mosaic that now is a bigger picture, which gives you accurate prediction. So it's a powerful tool to become separate from what I'd say is some pretty mixed up news sources that we suffer from in the Western world.
Yeah.
Well said. Well said.
Good stuff.
Okay, David, really appreciate all of that.
It's always a great pleasure. It really is. Keep sending those charts over. Big fan.
We will.
Thanks,
Dave. There's no fear. We're going to keep churning those out.
No, I love that. You come up with great combinations I don't see anywhere else. It's a unique USP, guys, so keep it up.
Will do. Thanks a lot, Dave. Speak to you again soon.
Take care, guys. Bye.
Bye-bye for now.